What's up, everyone? I hope you're having a fantastic day. So, in this new video series, what I'm going to be doing is showing to you all how is it that I analyze the markets, going about it day by day, and showing you all what kind of opportunities I missed, what kind of opportunities I caught, and the ones that I lost in. So, I hope you learned something from this video. I'm still a developing student from the ICT mentorship. I'm still going through it, and I'm learning a lot, to be honest. But yeah, I figured I'd start documenting and journaling down these days as a form of development for myself to see how far that I've come in from interpreting the markets. So yeah, if you're a developing student as well, I hope this video helps you out in learning more about how the market moves and such, and what kind of potential opportunities you can catch when you are in sync with the market. So yeah, let's get this started. So what we have here is a daily chart, and I saw that there was a buy side liquidity line here that I thought the market was going to aim for today, but obviously it didn't. So I'm actually currently developing right now as we speak. So what I first tend to do when I analyze the markets is I have the daily range from, I'm sorry, I cover, the daily range of yesterday's date. So this is today, this is yesterday's. And so I'll just go down in time frames and see, and I'll show you what I was looking at. So here we have the Asian range, and so what tends to happen when you form a candle is we have the power three play come in. So we have a accumulation, manipulation, and then distribution. So what I was expecting the market to behave is in a manner where it was creating that fake Judas swing to entice buyers up here in order to pretty much fake them out and have them turn into lower prices. So here we have the Asian range, the high to low, covering it. That's my accumulation phase. We have the manipulation and then the distribution phase happening afterwards. So until we had the market open at 9:30, that's when we started seeing higher prices. So I thought to myself, okay, well, we targeted this OB, printed these lower prices, and now we seem to be going for higher highs. That's where I started to look into what kind of opportunities I should be getting involved in. So as we were upon market open at 9:30, price was developing higher. I saw from 9:30 to 10, my SMT is telling me that all these charts are creating higher prices. So it'd be reasonable enough to look for higher prices, at least for the time being, right? So I thought, okay, cool, they're all in sync, so let me look for something high. And here's where I made my first trade. So now what this yellow line represents is the previous day's highs. So I figured, something that we could see because we are still developing this fake manipulation is we could see a dip into these highs only to create an FFG, a fair value gap to take it for lower prices. But all of my indications were telling me that things were going to go higher, right? We just checked what happened with my SMT divergence, if you will. Well, the market's all in sync, so I was in the bias of looking for something that was higher prices. So where I did make a mistake was right here. So in the 1 minute, we had this range form, middle range, that I was going to find calls to support higher prices from. But what ended up happening was we had a mini FEG right here. I'm gonna show you the 5 seconds right here, the FEG. That got rebalanced. So I thought, hey, you know what? This is my intermediate high, this pink line right here. And so once it got broken through, it created this range. Created this range out here that I thought, hey, you know what? This was the range that caused that breakup structure of that intermediate high. Let me just get the OP, which is all these 3 downside candles here. So I thought, good, this was going to be my range for entry, and we're going to keep going for higher prices. But what I failed to realize was that when price broke this intermediate high, we not only broke the intermediate high, but we also broke the long-term high. So that should have been my cue to not even be involved in the first place. But impatience gets the best of people, and even for me. So I put in the trade, and then that's where you see this loss here of 4,000. I tend to risk 2% per trade. I'm trying to get myself what's that word? desanitized from these numbers, because these numbers just don't mean much. They just are the result of a good or a bad trade, you know. So in the end, I tried not to let it affect me. Okay, cool. I took a small break for the time being after a while as I let the market develop, and when I came back to it around 11 is when I started to notice that price was developing lower prices, which goes with the theory that we were making this higher time frame manipulation to go for lower prices. So I thought, okay, cool. So we are probably, as it's developing right now, it looks like it's still going towards that way. So, you know, this is going to be my path, if you will, for the day. This red triangle. So, okay, so as we were up here, I thought, okay, so we're probably looking for costs to support lower prices now, right? But it only makes sense. We just made this manipulation. We just dipped into these previous day highs, and now I believe I did see a lower time frame FEG. Yeah, here it is over here. See, after this dip in the previous day's highs, we created another higher time frame range from which we reacted off this fair value gap, and so that was my cue. That was my hint that perhaps price is going to dip lower. So when that happened, I noticed something as well, that we were creating intermediate highs. So here was my long-term high, long-term low, right there, this whole range right here, because in a higher time frame perspective, show you probably 3 minutes. Yeah, on the 2 minutes here, we have a range that developed after we did the dip here to incentivize buyers to go for longs, but that didn't happen. So we have this range here. We have its FEG, and how did it react? Look at this. Yes, we have an intermediate high here. But what gave it away was that we broke structures higher, but we didn't break the long-term high. So we have this high here that didn't break this long-term high. But I thought, okay, so this is probably going to be an intermediate high as well, because check this out. We have a swing high with two short-term highs next to it. So that's also qualifies itself as a intermediate high. Cool. And so what ended up happening? We had this intermediate, we had this short-term high develop, created lower prices. And so that's when I thought, okay, cool. We have ourselves a break of structure of this long-term range. And how do we break structure? Pretty aggressively. You don't have, if I do say so myself, a pretty aggressive breakout. So now I thought, okay, cool. So what was the catalyst? What was the cause that created that breakout? It was this buying pressure or whatever it is, this buying activity that is considered to be an OP. So this whole red box is my OP. So what I wanted for price to do is pretty much get that dip into this OP, create a fractal of some sort, create an FEG in order to take it down for lower prices. As you can see, that's what ended up happening. We dipped inside the OP, created a fractal range right here. Right here. With its own OB, as you can see. And that's when I figured that's my confirmation entry right there. I don't need to know anything else more other than that, really, because again, I was already under the bias of selling, because we're in this higher time frame Judah swinger distribution phase, whatever you want to call it. So that's where I was already like, I just needed something, like I was already under that theory. I just needed like cause to support that theory, and it was given to me right here. After the dip into the OP, we created a range with an FAG. That's it. That's my entry. So unfortunately, this one I didn't tap again. I did not get tapped in. Only after it had happened did I notice. I was like, oh snap, I missed this one. So that's why it's really not logged into my MT5. So I thought, okay, you know what? That's okay. Trades come and go up. And if we are trading in the right path of the market, then it'll present another opportunity before the end of the day today. I hope so, at least. So that's when I took another small break as I waited for price to give me another reason to support my theory of lower prices. and it did around 11:20, which is I don't really trade past 11. But the only reason I'm doing this is because again I'm trying to just practice. Back to the topic. In later in time, price did give me a reason to go for more sells as we have this uh inter and so we had this range develop here as well. And do you see do you see its fair value gap? It's right here between these two candles. We have an SVG, and so I thought, ooh, we have we have a point of interest here that we can start off. All I need is another fractal entry for price to react off of this FVG and give us an entry to go for lower prices, and it did. Once it got into the fair value gap here on the short time frame, create another range right here. And with this range, I went deep into it. We found another fair value gap. See it? So what I like to do is get the 50% of it. And that's my stop loss, just a little bit below it. I was pretty confident about this one, and then that's how I got my profits for the day. And that's what allowed me to cause my target here. I like to target a little bit before the -1 on my fibs. So that's what ended up happening today. Price reacted off this fair value gap, under for lower prices, and yeah, we're off to the races. You know, I would have said, oh my gosh, I could have totally caught a 10R today. But after a while of trading, you know, I just tend to realize, you know what, profit is profit is profit. So whatever I catch is pretty good. On my book, I'm in this game to survive. I'm in this game to play for the long term. So, you know, trades like this are always going to happen, and so I'm not too worried about it. Yeah, even though I missed this larger profit potential, I was pretty content with how is it that I manage my risk and how is it that I manage my my exits in trades. So yeah, pretty cool that happened. And so now as I speak, prices continuing to develop. It looks like for lower prices. So we're gonna wait to see later on in the day to see if the whole prophecy was completed, right? Which is to go dip down these lower lows right here. But you know, to be honest with you, I stopped trading like around lunchtime, so like what's 12 p.m., 11 a.m. So I'm pretty much done for today. All in all, pretty happy with my performance, and we'll see what tomorrow brings. All right, I hope you enjoyed this video, and hopefully this helped you out in some way. And if you did, let me know down in the comments. I would like to hear your story. But in the meantime, you know, that's it for August 8th, 2022. So yeah, we'll catch you tomorrow. All right, see you.